Now, here's what we're going to be taking a look at in this episode. We're going to be taking a look at what market structure is, bullish market structure, bearish market structure, trend change, and we're going to look at some really important chart examples. Okay. So first of all, what is market structure? Now, simply put, by my definition, market structure is the footprint left by price movement. Okay. It's the evidence left behind by price when it moves. So as price moves, it forms a certain structure, right? And this structure is something that helps traders make sense of the chaos. So you see why it's very important for you to understand the fundamentals of it. All right. So what is a trend? A trend is a consistent direction of price movement. All right. So as price moves, it forms structure. And when price forms structure for a while, then we can say that there's a discernible trend in the market. And a trend is something that a lot of traders also take advantage of, right? And we're going to learn about that in a minute. Now, let's take a look at bullish market structure. Now, bullish market structure is characterized by uptrends, okay? And when we're looking at uptrends, there are two core concepts you have to keep in mind. One core concept is higher highs and higher lows. And the second, strong lows and weak highs. We're going to take a look at that in a second. But first of all, I want to point out certain things about trend. Now, I'm sure the first thing you're noticing is this. Why does it look this way? Okay? Why does market structure inherently look this way? Now, the reason it does is when the market moves, it just doesn't move in a straight line, right? It just doesn't. What it rather does is it takes periodic breathers as it moves, okay? And these periodic breathers are called retracements. Now, let's take a quick look at that for a minute. Here, the market makes a push up, okay? And then it retraces. A retracement is essentially a pullback before a continuation in the direction of a trend, right? So the market makes a push up, it pulls back, makes another push up, pulls back, makes another push up, pulls back. This is essentially how the market moves, right? Now, let's take a quick look at the concept of higher highs and higher lows. This is a low. This is a high that the market makes after it makes a push up. Now, as it retraces, it forms a higher low. Why is it a higher low? Because it forms higher than this low. And then it makes another push up and it forms a higher high. Why is it a higher high? Because it's formed above this high, okay? Another higher high formed above this high. This is a higher low from above this low, right? Now, another important thing to note is that when the market moves, there's something called break of structure, okay? At every point in an uptrend or a downtrend, when a high or a low is broken, that is called a break of structure. So at this point, we broke structure. And something really important for you to note, and this is very related to the way that I map structure personally in a mechanical way, is that after a break of structure, you can expect a pullback or a retracement, okay? So we had a break of structure at this point, price pulls back, and then it goes up and it breaks structure again, right? So now we're going to take a look at the concept of strong lows and weak highs. This low, okay, is a strong low. But we're going to take a look at this low so it's easier for you to understand. A strong low is a strong low for one reason. Why? Because it causes a break of structure. Now, a low that causes this break of structure is a strong low, and the expectation, or what I like to call expectational order flow, is that price is not going to go below this low. Okay, I'm not going to get into the theories or the technicals, but according to the most predominant SLC theory, it's because institutions have money here, so they have a vested interest in protecting this low because there's money invested. That's all I'm going to say at this point. Okay, so this low is a strong low because it breaks structure, and the expectation is that this low will not be broken as long as we are in an uptrend. Right? So after this pullback happens, this now becomes our new strong low. Why? Because it breaks structure to the upside before retracing, and then if this breaks structure again, then we have a new strong low. That's essentially the way it works. Right? So this is the theory of uptrends. Now, let's take a quick look at the reality. Now, guys, the reality is a bit messier than theory, okay? This is because in reality, we're not just dealing with up pushes and pullbacks or down pushes and pullbacks, whatever the case may be. We're actually dealing with internal structure because the market is fractal. We're going to take a look at that concept in a much later video, okay? Internal structure. And even sometimes, while we may be in an uptrend, we may see a temporary break of a strong low or a liquidation, which is a term you get to understand in a later episode, before the continuation in the direction of the trend. This is the reality, okay? So let's take a look at a chart example. Now, you can take a moment to either pause or go back, or however you choose to do it, and see if you can identify an uptrend on the chart before we begin. Okay, so if you got it right, I'm really proud of you. An uptrend, here we have an uptrend, right? We have a strong low here, which breaks this high, okay? We have a higher low, we have a higher high, a higher low, higher high, higher low, higher high, higher low. Okay, perfect. So let's move on. Now, a bearish market structure is essentially the mirror opposite, right? It's characterized by a downtrend, which is characterized by lower highs and lower lows. Here's what I mean. This is a high, this is a low, a retracement, price break structure at this point. Now, this is a lower low. Why? Because it's formed lower than this low. We have a pullback. This is a lower high. Why? Because it's formed lower than this high. Okay, so you get the gist. This is the reality. As always, a bit messier. We have to deal with internal structure, which is very, very important for being able to read and take advantage of pullbacks in the market. Again, this is something that you're going to be able to understand more in a later episode, okay? Again, pause, see if you can identify the downtrend before we start. All right, if you were able to do that, you're awesome. If not, don't fret, okay? You can always pause the video, go back, or watch it as many times as you need to. Okay, so this is a downtrend, right? Lower high, lower low, lower high, lower low, lower high, lower low. Perfect. Last but not least, trend change. What is a trend change? Trend change is simply when price breaks structure to the opposite side of what is expected in a particular trend. For example, bullish trend change. So we have a bearish downtrend here, right? Characterized by lower lows and lower highs. And then all of a sudden, price breaks structure, right? A strong high is broken, right? And price sustains that break and starts to form a bullish uptrend, right? So now we've broken past this downtrend and now we're forming an uptrend. That is essentially a trend change. So it's not like the case where you get a a temporary break, and price actually sustains in this case. It's the same thing with the bearish trend change, where you have an uptrend, then all of a sudden, whoosh, we break and it sustains, right? Let's take a look at some examples. You know what to do. Okay, so at this point, we have a downtrend, right? And here, all of a sudden, this high is broken and price begins to form an uptrend, right? An uptrend. And at this point, all of a sudden, this low, which is supposed to be a strong protected low, is broken. Price retraces and forms a new lower low and a new lower high. So it sustains. All right, that's pretty much that. If you've made it to this point, you're awesome. Okay. Now, again, like, comment, subscribe. Comment what you'd like to see, right? And subscribe to stay tuned to this space for later episodes. I love you guys. Cheers.